Hey, welcome everyone to the Story Trading Weekly Meetup. We got a nice agenda for you tonight, but first, Story Trading is not an investment advisor. Investing in securities involves significant risk of loss. This event is being recorded. It'll be provided immediately after the session's over to our paid VIP members, and will be posted up on social media later this week at the close of the week on Friday. So our agenda for tonight, first, I'm going to give you an update on Dario because I had a conversation with a colleague on going over Q1 results. So got a few clarifications on some things. Then we'll do a macro update. Is this a bear market rally that's coming up that we're having right now between the end of the day Friday and futures? Or is the bottom possibly in? We'll talk about that. Then I'll do a quick monkeypox review. And by the way, Vince is going to be joining us with that macro update, and he may have some monkeypox thoughts also. And then we'll get into an open discussion and Q&A. We'll probably pause at the in between, at the end of each section here, and pause the recording so we can have a little open Q&A in between the sections. So first, you all know I've been talking about Dario a lot, DRIO. This past week is pretty good. We're closing at 619. And what we like to do is tell the story of the chart. Why is it going up? Why is it going down? Based on our really fundamental belief that there's a reason behind the price action that can be identified. And if you can identify those reasons, you will have a trading and investing edge. And those reasons all fall under one of these categories: sentiment, catalysts, fundamentals, and technicals. So let's go through some of those updates. Actually, let's talk about technicals first. This past week, we saw continued divergence and relative strength in Dario after, in the previous week, breaking the 50 DMA, which is a very rare feat. I don't know if you can find another growth stock that's been hammered so big that is now above the 50 DMA. That's a tough find. So this past week, it was up 5.6%, while ARK was down 2.7%, the NASDAQ was down 4.4%, and Teladoc was down 2.5%. So that's a good sign. While it broke the 50 DMA in the previous week, it bounced off it, right, as a support line on Friday, and the RSI is 56, both positive technical signs. And you can see that here in the chart right here. That red line is a 50 DMA. You can see where initially on the first day it tagged it, it was resistance. And once it opened above it, basically the next day, it became support, at least intraday. The thing with the daily moving averages, they're great for like day trading. Not I shouldn't say day trading, but they're good for finding intraday supports. I find it really works, but it doesn't mean it can't break below the 50 DMA later. It can, okay? It can break below the 50 DMA, but usually on the first touch of a major MA in both directions, whether you're going up and you're touching it, or whether you're going down and you're touching it, and I don't know the numbers, if someone can, maybe there's a study out there, but in my experience, it's got to be like a 90% hit rate, right? That first test of it is always going to do its job, acted as resistance here, and the first test of it acted as support here. So that was just beautiful. So that's the technicals. The catalyst, there were 2 new contracts announced this week since the earnings came out. One of them looked like a very large Texas employer because they have employees across 17 states. So that was good to see. This is not anything that re-rates the company in any kind of way. They have to continue to get these deals in order to meet analyst expectations and internal expectations. So we should keep seeing these things throughout the year. Now, fundamentals, had a conversation, and some of this is sentiment related as well. But as I said, I had a conversation with the CEO this past week, and here's some highlights. I wanted to get clarity on what that $42 million contract value is all about. That contract value does include not only employers, but includes insurers as well. They have a couple insurers in contract, but it does not include the phase 2 launch of the insurer. I'll talk about that more in a second. The reason it does not include the phase 2 launch of that national insurer, which is not yet named, but widely rumored to be Aetna, is because they haven't signed the contract yet for that phase 2 launch. So we'll talk about that more in a second. Now, as far as for those of you doing financial modeling to see if they can meet the analyst expectations longer term, So far, early data looks like they can, because they need to get a 35% enrollment rate with the employees that sign up under these employer plans. And so far, they're seeing that across the board. No account is under 35% or tracking. They're all tracking for at least getting that 35%. Some of them are already either at 50% or tracking 50%. There's a question someone in our community had about, well, how much more can they cut in OPEX? So that a sequential drop in OPEX as they move away from B2C, business to consumer, and towards B2B2C, business to consumer. And Era's expressed to me that there's still a few more million in OPEX they could cut as they continue this shift from B2C to B2B2C. So that was good news. Now, key nugget, I touched on it a second ago, but I want to dive into it a little more. This phase 2 launch is a very, very significant launch. It represents the potential for at least $10 million of revenue for the company in 2023. And ultimately, man, he gave me a number. I think he had said it could be up to $100 million long term. Yes, I think it could, because it gives them access to tens of millions of customers. This launch, tens of millions of customers, and they're going to be paid an access fee of a few dollars. Sounded like a few, I don't know, let's say $3 per month per customer who signs up, even if they don't use it, right? It's an access fee. So tens of millions, let's say 35% enrollment rate, 3.5 million times 3, 10 million times, you can see how I can get to $100 million. This is a big, 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 big deal, okay? And I do not believe this phase 2 launch, if and when it happens, is priced into the stock. Now, what's really important that I got clarity on is I had always assumed that phase 2 was already signed, and it was just a matter of logistics to reach certain milestones. So they automatically then launched to phase 2. Basically, phase 1, the national insurer, they're just doing some certain testing and whatever preparation they have to do. And then phase 2 is going to be the big national launch. So that phase 2 contract is apparently fully negotiated and sitting on the desk of the insurance company, and it's just waiting to be signed. And Era, as a CEO, thinks it'll be signed in a couple weeks. Now, the caveat to that is, he's said that before for other contracts, which he said in a couple weeks, and it ended up taking like 5 quarters. So it could be any day, or it could be 5 quarters, or it could be never, right? So that's a bit of good news, bad news piece of information, right? The bad news being, I thought it was already signed, but it's not. The good news being that this is a much bigger deal than I had realized. And the fact that it's not signed also probably means it's not priced into the stock that much. So when this, we'll talk about how I plan to play in a second. So we'll get back to the game plan. But key nugget number 2, going through the financials, I had a colleague with me on the call who was really, really good on the financial side and the numbers. And based on their current contracts, right? And even including if they get this phase 2 launch this year and 10 million plus in 2023, they would still probably need 35 million or so in additional capital, right? Which they acknowledge. Now, if they accelerate, they sign a whole bunch of big, new deals in the next few months, who knows, maybe they need less cash. But as of now, they're going to need 35 million. But here's the deal. They have plans. First of all, they think that they're going to get that money. Either have 3 options here. They think they're going to get that money either from Sanofi investing, which is kind of part of the deal they have with Sanofi. They're not like, it's understood that Sanofi is going to invest, although I don't think they're contractually obligated to invest, but it seems to be going in that direction. And the other possible way to get this money is another strategic partner, like Sanofi in the big pharma space, and they're in conversations with someone. They talked about this on the Q1 call. So those are the 2 most likely ways they're going to fund their way here. He expressed a adamant kind of viewpoint that he will not tap public markets to invest. Certainly not at these prices at $5, $6. he believes he can get access to a non-dilutive bank loan in the worst case situation in order to avoid diluting. So that was very great. I like that a lot. So that's the story with Dario, and those are the two main nuggets, right? And it's also the two main things that's going to de-risk this investment. Let's assume for a second, tomorrow they announce the phase 2 launch, and then that de-risks it tremendously because the revenue is going to ramp up very rapidly. And then let's say a week later, a month later, they sign some sort of financing with the other Sanofi, a new strategic partner. They announce like they get access to some bank loan, right? That's the other thing to de-risk the investment. Theoretically, if those two things, first of all, when the first one happens, it makes it much more likely the second one's going to happen, right? That's obvious. So you can almost make that jump almost like 100% guarantee, right? They have that PR that big insurers coming on, then you really don't have to worry about like a dilutive financing in the public markets. They're going to get Sanofi as an investor, or they're going to get a strategic partner, or they're going to be able to get the debt, right? But when these two come online, I think this very much becomes a situation like AHR, when it went from 10 times from 2.5 to 25, where you're going to see a very, very rapid re-rating of the stock, and depending on where the stock is, I don't know if it could do 10 times, but the colleague who was on the call with me thought that this is a company that if they continue executing and they get these two things coming through, the stock could be, in 5 years' time in the $50 to $80 range, let's call it. And it's $6 now, right? So it could be like a 10 bagger over the next 5 years. So I think you're going to see a rapid re-rating of the stock when the phase 2 launch is announced. Plus, you have the sentiment factor, which is going to be really good for a stock like this, right? I think it's going to be much different than a Smith Micro. This is a very hot area. People are going to be hungry to see good news in the digital health sector. A lot of Teladoc investors are disappointed that money came out. The original Livongo investors, first of all, they're originally disappointed they sold to Teladoc, but there's a ton of people looking for a successful company in the digital health space. And that is going to cause a rapid re-rating and probably also a premium in the stock. And you're not going to see the same issues you have with an SMSI as you're not going to have the same issues with Dario as you have in SMSI in terms of sentiment and people really believing the story. So that's really good news. So game plan for me, honestly, I have a huge position, but I am not going to hesitate even for a fraction of a second. Well, I guess I should be smart and read the press release. Sometimes I tend to not do that when I know the catalyst is coming and I'm expecting the catalyst and I see the headline. I'm like, that's the catalyst I was waiting for. But it's probably wise to spend 5 minutes to read the press release because you never know. It may not, there may be some language in there and it may not be exactly what you're expecting, or it could be even better than you're expecting. So it pays to take a few minutes and read the PR before taking any action. But I'm not going to hesitate. I'll be adding even more when that press release comes out, if and when it comes out. Not guaranteed to come out. So be careful with your allocations. You shouldn't play this, certainly not with short-term options. Play this assuming that this phase 2 launch will come through, right? That was the negative part of the nugget I got, that it's not 100% guaranteed because it's not signed yet. So with that, what we're going to do is take a pause in the recording here so the VIPs who are attending live can ask us some questions about Dario, and then we'll go on to our macro segment. But for those watching the replay on social media, make sure to follow us on YouTube and on Twitter at StoryTrading. We're also on Spotify. You can find our Spotify channel at StoryTrading.com. We have a link to it over there. So thank you everyone for joining us. VIPs, stick around in case you have any questions.